For a while there, things were pretty quiet on the European deal-making front, but that's all changing. A major economic force is waking up, and today, we're going to dive into exactly why. So yeah, the mergers and acquisitions market, it's not just stirring, it's absolutely bursting with energy. This shift is kicking off a whole new wave of opportunities, and of course, some big challenges, across the entire continent.
So what's really fueling this fire? Is this a recovery that's built to last, or is it just a flash in the pan? And, the most important question, who's actually going to benefit from all this? Let's start with what's driving this comeback.
Right, so why now? What's the big deal? To really get what's happening with this M&A boom, we've got to look at the big picture. All these powerful forces that have lined up just right to get companies in the mood to make deals.
And it really all boils down to three key things coming together at the perfect time. First, companies are in great financial shape. Second, regulators are, let's say, more open for business. And because of that, corporations are sitting on a massive pile of cash, or firepower, just waiting to be used. And what's really striking is just how healthy these companies are. I mean, look at this chart. The amount of debt companies are carrying is near historic lows. So with less debt weighing them down, they've got the cash. And just as importantly, the confidence to go out and make some big moves.
So who's actually doing the buying here? Well, the data couldn't be clearer. A whopping 63% of analysts think it's going to be corporations, what we call strategic acquirers, who will be leading the charge. That's way more than private equity. They've got the ability, and now they've definitely got the motivation.
And look, it's not just about the money. A huge piece of this puzzle is that the regulators seem to be giving a green light. Both the EU and the UK are signaling a softer, more predictable approach to mergers. This is a game changer, because it removes a massive roadblock that used to kill deals before they even got started.
Okay, so we've got the why. Now let's get into the where. Let's zoom in on the specific sectors where all this action is really heating up.
This quote, it just perfectly captures what's going on in asset management. It's become a race for relevance. You've got rising tech costs, changing client demands. It's forcing firms to team up. We're past the point where it's just about growth. Now it's about pure survival. And the stakes here are incredibly high. Analysts are predicting that a full 20%, 1 in 5, of these asset and wealth managers could either disappear or get bought out by 2029. In an environment like this, getting bigger isn't just a nice idea, it's a strategic must.
And this thinning of the herd, it's not some future prediction. It's happening right now. Just look at this table. The number of deals per year has more than doubled since 2022. And check out that forecast. They're expecting an incredible 500 deals a year for the next 5 years. Wow.
Okay, telecoms is another major hotbed, and Italy is a fascinating case study. Right now, the market is split 4 ways, and that's led to a brutal price war. Companies are just burning through cash, and network quality is suffering. But if they consolidate down to 3 players, you could unlock huge benefits, like better networks and, importantly, more revenue from each customer.
But hold on, it's not all smooth sailing. I mean, a comeback is one thing, but actually getting a deal across the finish line is a whole other story. There are some pretty significant hurdles that can stop even the most promising mergers dead in their tracks. And that's the thing. Every single deal has to run this gauntlet. This gives you an idea of just how many things can go wrong. First, you've got to agree on a price. Then you argue about how to split up the assets. Then you fight over who pays for the restructuring. And that's all before you get to the long and totally unpredictable antitrust review. It's a minefield. And if you zoom out, there are even bigger risks lurking. National security worries can kill deals in sensitive areas, like defense. And for a place like Europe, which is so tied to the global economy, any policy shifts from the US, especially on trade, can create some serious headwinds. Okay, so we've looked at the drivers, the hotspots, and the hurdles. After all that, what's the single most important thing you should take away from all this?
The big takeaway is really this. We're looking at a recovery that's both resilient and incredibly complex. The fundamentals driving it are real and they are powerful. But the path forward is anything but simple. It's an environment that is absolutely jam-packed with opportunity, but it's going to reward the people who can navigate all that complexity.
Which, of course, leads to the final question. In a landscape that's this tricky, who are the potential winners? Where should we be looking?
Well, this table gives us a pretty good roadmap. Telecoms are just ripe for consolidation.
Defense companies are trying to get bigger and stronger, business services firms are on the hunt, and of course, you've got the investment banks who are perfectly positioned to advise on all this activity and make a pretty penny doing it.
And that really leaves us with the ultimate question, doesn't it? All the conditions are there. The corporate bank accounts are full, and the regulators seem ready to play ball. So, is this the moment? Will Europe's top companies finally seize this opportunity to build a new generation of global powerhouses? Or will all those hidden complexities and hurdles be enough to stop this comeback right in its tracks? That, my friends, is the multi-billion-euro question.